Hi, this is Michael Waits, and welcome back to the Asia Tech Podcast. Today, we are joined by Ritwik Ghosh and Sauvik Datta, the co-founders of SeedFlex. Guys, thank you so much for coming back and doing this, for taking the second shot, technical difficulties from last time. And I really appreciate just having like the right sense of humor and the right attitude to come back and do it again. That's generally quite hard. Anyway, let's give the listeners a little bit of both of your backgrounds for some context. And Ritwik, let's start with you.
Yeah, great to be back, Michael. Again, hope the second time is a lucky charm. So quickly on my background, I started my career with Capital One Bank in US, and then I moved on to join a consulting company, Oliver Wyman, also in US. Um, and both of them were in consumer credit, SME credit space. So credit is by now in my DNA. And with Oliver Wyman, I moved from US to India for a short period where I helped them start their India consulting practice. That was my first day zero endeavor. And then we moved to Singapore about 12 years back. And as it happened, as I say, Grab happened, as in Grab was one of my last clients with Oliver Wyman. And back then, Grab was in the initiation phase of setting up their financial services business. So I ended up first advising Grab on fintech lending, how Grab should think about it. And I gave them a piece of document which they took very seriously and, in fact, set up the whole division, which is where in 2018 I ended up joining Grab to help build and scale their digital lending or fintech lending business. Um, I was with Grab until late last year, and that's where I also met Sauvik, my co-founder, and that's when again SeedFlex happened.
Okay. Sauvik, how about you?
Thanks, Michael. Good to be back. Yeah, quickly get into my background. Been in financial services for 20 odd years. Started off with McKinsey in India, moved to American Express, Standard Chartered Bank in Singapore, then did a day zero startup called Validus Capital for 3 years. 2018 is when Grab happened. Uh, and my experience has been broadly in risk management, risk strategy, credit scoring, machine learning models for customer underwriting. And during the last 5 years with Grab, until mid of last year or late last year, it was focusing on their fintech lending businesses, risk management, collections, and risk strategies, and credit operations.
Can I ask both of you guys this? I mean, we'll get to SeedFlex in a bit, right? But I want to talk about this experience at Grab. Um, what was their idea, right? In other words, why did they want to build this business so badly? I can understand why they reached out to both of you just based on your experiences, like at scale. But why did they want to start this business? What was the impetus for them?
Yeah, great question, Michael. And just for historical context, it wasn't commonplace back in 2017 for platforms or ecosystems to have lending businesses. In fact, very few had, right? Um,
Yeah.
but Grab, as a part of its mission, has always been driven by creating impact for the underserved, the underbanked of Southeast Asia. And as a part of building the platform, when they realize they have millions of drivers working for Grab and millions of merchants working with Grab, and how difficult it is for those micro entrepreneurs to access basic financial services, digital payments, digital lending, digital insurance. I think there was a clear understanding of a gap in the market, and that's where the leaders at Grab back then, with credit to them, that back then figured out they must make an attempt to use their leverage as an ecosystem to plug that gap.
You use this term micro entrepreneur, and I don't think that most people think about the drivers that work at Grab, nor the merchants that are on the platform as well as micro entrepreneurs. But can you dig a little bit deeper there, both of you, either one of you, just to explain why you think of them as micro entrepreneurs and why Grab thinks of them that way as well, because I do think it's really unique. Yeah,
Yeah, I mean, I can start, and Sauvik, please join in.
please.
Um, I mean, think about a driver, right, for a moment. He essentially has an asset or access to an asset, which is a car. And based on that, he is living his daily income and expenses, and income net of expenses is what he takes home. So every day he is in a business of variable income, variable, partly fixed expenses, and end of the day, a variable amount of money that he can take home. And he's living with that risk. And then on the same time, he's thinking of how to get a better car, how to maybe have a second car, how to have a second business, a second side hustle. So it is what an entrepreneur feels like. And from our experience in SeedFlex, we can tell you that is how it every day feels like.
And in a way, it's weird if you think about it even more, right? His family is almost like his investors, right? Because in a lot of cases, these guys and gals that drive, or even the merchants on the platform, have kind of pooled money from their families and their neighbors and said, "I'll take care of us if you let me do this thing." Is that fair? Does that make sense?
Yes, and they are that's 100% fair, and either drivers or the merchants, right? It is the time that they
Yeah.
have, they're trying to optimize to ultimately make a business out of it, right? It's not a fixed payment type or salaried day-to-day existence, right? It's an existence based on how smartly you can you can sell your time per se. In driver case, it is basically how smartly and where they will look at themselves to get the best fare. For merchants, generally Grab's merchants at F&B, it is how smartly you can manage inventories, how smartly you can manage the online platform and the demand coming out of online platform and the whole supply chain of it. So really think about it. They are individual new age businesses, millions of them that are coming and growing, and eventually their objective is to grow the business as well as grow the family in terms of how they can elevate themselves in the socioeconomic structure.
Can we talk a little bit about the culture at Grab, if you don't mind? One of the things you both said, right, was that they've always been committed to serving the underserved, right, both and creating impact. And it seems to me that to do that, particularly in a business like Grab, I mean, in 2017, it wasn't nearly as big as it is today, but still quite big. Yeah. What was it like from the cultural top down where you felt like, you know what, I believe in this mission, and I believe that the people that are telling me about this believe in it as well? How prevalent was it inside that culture?
I mean, from my end, it was very unique, very refreshing, and very authentic. And again, connecting with my background of 16 years in banking and financial services, everybody looks at financial services as a money making unit economics business, right? That's commonplace. The tech that Grab took on it or takes on it was, yes, it is, but it has to be a double bottom line, triple bottom line business. It has to serve the community, it has to serve the beneficiaries, and of course, it has to create value for shareholders. No one denies that. And that was part of our day zero mandate. And so we tracked things like the overall income opportunity we created for micro businesses by giving them access to credit. Did their GMV go up? Did they like the product? Was NPS super high? And did they talk about the product with other merchants? Right, it wasn't just about making money. Of course, any financial product to be sustainable has to be positive, but the true north was a combination of impact, sustainability and economics, and that was just very clear and super refreshing. And it is true at all levels, not just at the level of leadership, but in our own business, relationship, on the risk on the commercial side put together, and every level of team, we kind of breathe this mission and impact.
Can we, so maybe you can address this for me as well. Um, None of these businesses get built overnight, right? And particularly because it's a new business, it requires a lot of testing, a lot of data management, a lot of data analysis. Maybe you can delve into how like this idea of taking a long-term approach while still moving fast was really important to you guys when you were trying to building this business at Grab, yeah?
Yeah, so I mean, if you, I'll try to address the previous questionnaire with a different approach, and then connect that back to this question. Yeah. So if you really look at what makes this business successful, was starting with the target set of customers from from a standard industry best practice perspective, they are bank rejects, right? if you if you go into this set of customers, you won't get a, even if you get a bank account open, if you're lucky, you won't get a credit line or a growth loan, right? Why?
Yeah, it wasn't like they were comparison shopping
Correct.
between the bank's products and some other product. Couldn't do the comparison shopping,
Correct.
right?
Now the other extreme is they get credit products, but from predatory money lenders, from that class of
Yeah.
lenders, right?
Yeah, yeah, which is
Which is
horrible.
horrible.
Yes.
Now, when we set up this mission of solving this problem, we said that we have to do it by creating something that takes care of the risk. Why they are considered as non-bankable? Because general perception is they're risky.
Too
They're too
risky.
risky
Yeah,
as a
too risky.
broad brush, right?
Yeah.
Everyone is of that
Or
segment.
can't even figure out the
Correct.
risk, right? It's just hard to measure.
Correct.
Yep.
So we took the challenge of figuring out the risk and having enough risk mitigants so that we can still offer to this customer base and still can manage a sustainable portfolio. That was our greatest mission, I think. So when we set up the team top down, we said everybody works on one mission: how to make this sustainable, and without being crossing the line of uh, without crossing the line and getting into predatory lending, for that matter, right? uh, and be ethical about it, be transparent about it. That was what we practiced. It was not something in a big bold vision statement or mission statement. It was actually not. It was actually what we were practicing day to day.
But I mean, it's weird to have to say it outright, right? But like when you go to sleep at night, don't you want to be able to feel comfortable that the value that you're providing, like you said, is sustainable and impactful? This is the triple bottom line you were talking about, and they were actually helping people out, particularly for the unbanked, right? Like guys and gals with plenty of money can get credit wherever they want to, and getting the credit or not getting it doesn't change their lives. But the cohorts that you're addressing, getting even just a little bit of credit can literally be the difference between sending their kids to college or just maintaining a level of poverty that's not
Yeah,
sustainable.
absolutely,
No?
absolutely. And even day to day expenses, suddenly there were cases where, say, in certain countries, certain market, the price of fuel went up overnight.
Right.
And
Yeah.
these are micro entrepreneurs, again, to the point, why we consider them as micro entrepreneurs, because ultimately their one of
Right.
their inventory is fuel. Otherwise,
Yeah. One of their input prices is oil, right? And they can't control it. So, yeah.
and then during that period of instability in the market price of fuel, because the government in that market was still trying to figure out how to control the pricing, etc.,
Right.
a credit line helped them survive that period.
Yeah.
So it's not
Yeah.
only for the growth aspect, yes, that helped. It also for their how they run operations of their micro businesses. So both aspects that the credit line helped.
What was the source of information or source of data? And that may be the wrong framing of this question, actually, that actually allowed your team to understand what the risks were in a way that big banks couldn't. Was it alternative data, alternative measuring? Was it the cell phone? Like, what were these things that allowed you to say, we think we understand this, even though it hasn't been addressed previously?
Yeah, I think I'll approach that question in two parts. One is the pure data part, and the second is the strategy part, because both are interlinked, and how these two interplay together to make this successful. So data part was the ecosystem data, uh, from an underwriting perspective, that that gives us enough information in terms of the driving behavior of the driver, how much money they earn, which days they earn, which days are these fluctuating, variability of that information, right? So that as a whole goes to the data. uh, the second part is the strategy. So once we put into our mind that this is something we need to make it sustainable from day zero, suddenly the other extreme of grow for the sake of growing in a lending book, which we have seen in multiple examples,
Yeah.
that went away. So it's almost like,
It just didn't make sense anymore,
yeah,
right?
correct. So you are growing and you're trying to create strategy where you are testing certain small segments and then expanding fast, or testing, if it is not
Right.
working, you are bringing it down in terms of volume. So those micro strategies worked beautifully for us, and that actually helped us survive COVID. So during COVID, when the driving dropped, we had ample amounts
Right.
of playbook in our arsenal to manage the portfolio.
At some level, this must have been a lot of fun for both of you as well, right? Because you have these theses, you also have all this experience, and during your lives, you must have been thinking, there's got to be a better way to do this and better way to address these markets. But if you're working at a traditional bank or a traditional lending institution, you can't kind of test them out. And there are a bunch of different reasons why, but not the least of which is that at the beginning, it's just not going to move the needle for a multi-billion-dollar business to get another $1 million of revenue. But for a brand new business, getting $1 million or $10 million of revenue, again, is just it's paradigm changing. And you can address things in a way that have never been addressed before because there's no legacy around there saying this is the way we've always done it, kind of thing. Must have been fun, no?
Yeah, I mean, what it was a clean slate, right? With just
Yeah.
a whole lot of opportunities and options that was given to us, and we are all forever thankful to have given that opportunity and freedom. Just one point I would connect with the last topic of discussion is uh, I think conceptually. Um, a lot of the credit industry treats credit as out of the door money problem. By that I mean that, oh, you need to know the borrower perfectly, you need to have great deal of information, and then only you should give credit, right? But at least half of the challenge in this credit is about how do you get your money back. um, Now, an ecosystem like Grab allowed us to lower the threshold of knowing the borrower because we had an ability to take the money back fractionally from their micro businesses as cash flows came in, which in other way make our job of having perfect information, which is what the traditional industry insists on, wasn't necessary, right? Because we knew as long as they earn on the platform, they're successful, the platform is successful, and they are successful, and we are successful as lenders. It's a win-win-win. So that was also a part of the secret.
Can I ask you this? And I used to say this about AWS as an investment platform for startups, but you'll see the equivalency here. Grab is watching what all these merchants do, watching how much the drivers drive. They can actually see them changing and growing over time. And if the platform is the business that's allowing them to grow, is there a way to provide like reverse credit? In other words, go to a business or a merchant and say, your business, if you took a little bit of credit, could grow twice as much. Just be proactive about it as opposed to waiting for them to come to you because you have all the data and you can analyze it maybe better than they can, if that makes sense, because they don't have all the resources that you do. Was that something that you thought about as well? Does that make sense?
Yeah, I mean, absolutely. And that's how we approached it. Once the product,
That's cool.
once we got confidence with the product, we essentially approached the merchants, and they didn't believe it because credit is always
Yeah.
like positioned as a privilege.
Well, for them, it was always scary, right? Like, oh no, what am I going to do? And their experience had always been predatory. Their cousin's experience has always been predatory. So they're like, yeah, I don't believe you guys, kind of feeling, right?
Right. So they didn't believe us when we knocked on their doors and said, hey, you are great. Here is credit that can help you grow faster and be greater. And they're like, no one ever done this to us. Like,
Right.
am I supposed to not apply for credit and get rejected 5 times before we actually get credit? And are you like some sort of, fishy endeavor that you're coming and knocking on my door
Right.
and telling me I'm credit worthy? it was just refreshingly different, the power dynamics of that approach. They eventually believed us and they benefited from us, and the experience was such an aha that we didn't have to market the product, they marketed it.
So you must have had a bunch of these aha moments, right? But one of them led to the founding of SeedFlex. So talk to me about what that is. With all the data and all of the connectivity and all of the resources you have at Grab, it seems like why would you leave that to then go again and build something from scratch? What was the reason for that?
Yeah, I will maybe go back to some stories, and then
Please.
Sauvik, pitch in with more of the analytical lens. But as we were going through COVID, right, we got a bit disconnected, sitting in our bedrooms and trying to do work. Um, don't want to remind you or anybody of that, but that's how life was. So post COVID, when we went back to the markets, I remember this visit in Bangkok, and I talk about that merchant Kundao, and we were asking her about her experience and how she managed to survive. I mean, she runs a bakery, which was an offline bakery, and she was in tears to explain that she only survived because she was able to go online almost immediately overnight and sell her stuff, and that's how her business survived. Um, and as a corollary to that, we were then proving her and similar businesses. I remember Ahmad, the fish seller and seafood reseller in KL. They all said that they really powered through COVID by being able to go online. However, what they found very challenging is how to get credit to support them when they made this pivot or when their businesses took shape online, because all they had was trajectory of their sales, maybe from the offline one, maybe in the online one, but no one was willing to give them access to capital based on what they had achieved, just based on their cash flows and sales and
Yes.
trajectory.
And in a way, this is kind of sad, right? Because what happened to them, that's like what happened pre Grab. And then they get the benefit of being on the Grab platform. Somebody has all this data, then somebody can actually offer them credit. And then, boom, one day they wake up and everything's gone again. And they're right back into this vacuum of nobody understands my business. Nobody has any of this data. Now I'm never going to get credit again and I could die kind of thing. Yeah. So they're stuck now once they're off platform.
Right. And that's where we started realizing that, of course, as part of the platform, you can address part of this problem, but
Sure.
not everybody is on any single platform. Not all of their sales are on any single platform. So the gap is just way bigger. I mean, online merchants going offline, offline merchants going online, you're going from platform A to platform B. It's very fragmented. So for any single platform, however big and rightly incentivized they are, they wouldn't be able to tackle this gap in a meaningful way beyond their own captive audience. And that's where the idea of SeedFlex came to us.
So are you, and sorry to interrupt you for a second, but are you suggesting then that their businesses that these micro entrepreneurs were running were actually even bigger or potentially even bigger than they looked like when they were on Grab, which means that I think that they should have even more access to credit, right? Because all that Grab saw was this stuff that was happening on the Grab platform. And if they were literally selling offline or selling through another platform, it wasn't being consolidated anywhere. So their businesses could have actually been bigger than they looked to you there. No? Was that the idea? That was the gap you were trying to fill?
Exactly, Michael. You just got to the point. Um, and typically, statistically speaking, a platform captures 20% of their sales, 25% of their
Oh,
sales,
wow.
right?
Okay.
Um,
Yeah.
that's so there's four times, five times of what a platform sees. That is the actual size of the business. And then Grab as a platform is focused on F&B, but there are online sellers who are non F&B. There are
Clothing, everything. Yeah.
clothing, fashion goods, accessories, all kinds of stuff, electronics. So we figured that there is the opportunity to serve that is 20 times, 25 times of what we could have served as part of any single platform. And that was the inspiration of saying, let's build something that's for the merchant first, which understands the merchant and can aggregate across different platforms. And ultimately, that's the North Star for us.
Was there, and Savik, maybe you can address this for me. Was there, particularly from the risk management standpoint, was there some level of excitement around this idea or this revelation that, wait a second, we thought we're seeing all this data, but as Ritwik just said, you're really just seeing 25 or 20% of the data. If this could be 5 times bigger, we need to go do this on our own. Like there must have been some excitement around that. Yeah.
Absolutely. So when we saw the size, now talking about the 20 to 25%, that's at a meta level, right? You can't really extrapolate when you're actually underwriting one single merchant.
Right, right,
We
right.
couldn't have extrapolated and done that as part of Grab. Then we said, okay, maybe the only solution for a merchant focused product, again, the merchant comes at the top saying that I serve you with the right amount of credit that you deserve. Whether you take it or not depends on your situation, but I need to give you a credit line that takes care of your entire cash flow.
Right.
That's when the that's when the excitement became 2x to 5x.
Yeah.
In addition to what we were doing with Grab, right? Then we started digging in for almost 1 year, saying that let's dig out the what the data looks like before even we say that this is a problem to solve. How big is the problem? Uh, and then if you see the product structure, this only works under the assumption that merchants are already cashless, right? They accept cashless payments, they sell cashless, hence accept from their end customers cashless payments, and they get settled on their cashless sales digitally, right? So there are two aspects: one is underwriting and one is collections. So when you dig deeper, we found about 7 million merchants across Southeast Asia that are already cashless are falling into this category,
That's a lot.
and of which only maybe a fraction of that gets some form of credit either through some of the ecosystems like Grab. And again, it is concentrated within one particular industry, which is F&B. So we said, yeah, this is something that we should do. uh,
What does the platform look like to the merchants? And whether it's the F&B people or whether it's the, clothing or the luxury goods or the accessories people, what does the platform look like to them? And is it something that serves the merchants on a day-to-day basis where they can see like a dashboard and they can see information, or is it just something that the lenders look at on the flip side, or does it go both ways? Does that question make sense? You know what I mean? Like who's using it and how are they using it?
Yeah. So the product and the platform is pay as you sell advance. So we figured, because it's merchant first, it's very important for us to connect with the merchant on what are they going to get from this, right? So we're calling it pay as you sell advance. What it is as a micro merchant, you get an advance or a limit that is up to 12 weeks of your sales, historical sales, right? That we get from our partnership with platforms.
Got it.
And then they can draw down that limit with a single fee. There is no interest, no late fee, one time fee. And they pay us back from their future sales fractionally as a percentage of their future sales. And that could take anything between 12 to 24 weeks, depending on the quality of the merchant. So it's a live product, dynamic. Once the limit is there, it self graduates, right? Which is another thing that we try to solve for here, which is every underwriting we have looked at traditionally is a one-time affair. You look at the history until today, and then you make some
So that's what I was going to
judgments.
ask you. That's part of the innovation here, right? Is that it's like a real-time platform, and as your sales increase or decrease, the amount of credit that you get automatically increases and decreases as well, which is kind of cool, right? That dynamism, that dynamic part of the platform is actually an innovation. And I kind of put it in my notes, right? It's almost like because you're focused on the merchants and not on the purchasers or the lenders, in a way it fits into this like BNPL category, but in reverse, if that makes sense, right? Because you're giving them credit before they make the sales because you're projecting that those sales are either going to get made as they have been made or more. Yeah.
That's right. It's almost like I think that in traditional sense, it's like an overdraft facility based on their historical sales and our confidence in their projected sales. And the way they pay back is similar to what would be a salary advance for a salaried employee. I mean, what salary advance is essentially, I'm advancing you what's yours. In this case, same.
Yeah,
We are
yeah.
advancing the merchant what is going to be the merchant's future sales. It's as seamless.
Yeah, yeah, I was going to say that too. There have been a lot of businesses built and funded on this idea that you get paid at the end of the month, but you have expenses during the month, and we know what your salary is, right? And in this case, or in most cases, it's fixed. So we know we can give you that money bit by bit. You can draw it down. And then at the end of the month, we look at what your salary is, we look at how much you've spent, and we kind of net it out in a way, right? But now you're doing the same thing for the merchants at some level, yeah?
Even we are making it even more seamless and easy, in that net it out end of the month is happening every day. As a fractional small amount, they are paying back the advance. So that's why it is called pay as you sell. So as you sell, you just pay it back.
So can I ask you this though? Because we talked earlier, right, about when you were at Grab, you used to go to the merchants and say, like, you may not know this and you don't have to apply, but I'm just going to lend you some money. And they're like, this feels really fishy to me. Kind of first result, first reaction. What is the reaction you're getting now on the platform, right? Because it's a much bigger idea and it's a different way of doing it, right? Because you're not asking them to make a monthly payment. You're not asking them to make a quarterly payment. You're just going, we're going to net this thing down every single day. What was the reaction at first, and what is the reaction to them now that they see the benefit the credit can have for them over time?
Yeah, it's. I think we are going through, and we will go through a similar journey of, oh, this can't be true, to, oh, it is really true. How is it even true, right? Those kind of aha moments. I mean, it's early days for us, but
Yep.
one of those efforts is first educate the partner. So we are working with other platforms, right? Whether they are into online marketplaces, payment service providers, on-demand platforms. First job for us is to educate the partner, because the partners reach out to these merchants on our behalf. And that's a difference from how we worked with Grab, because it was embedded into Grab and they were all Grab merchants. Now, today, we are going via the partner because that credentializes us, builds trust. And that's another big factor in finance, right? Trust. As a new entity, we need to build trust. So the partner helps us that. So first we educate the partner, then the partner communicates to the merchant, and we start directly interfacing with the merchant, and we have an opportunity to share what the product is with the merchant. Again, I think the important part is, once they experience the seamlessness of the repayment, and they don't get stressed about how to pay back my loan. I mean, our core belief is, most of the people, most of these micro merchants, they are good people. They want to do good.
Yeah.
They are doing good in their
Yeah.
life. So it's not like by intention they don't want to pay us. That's not true. That's a minority of people, right?
Those are edge conditions.
Those
Yeah.
rich conditions. They all want to
Yeah.
do the right thing, and sometimes their experience of having to do this has been so sketchy and bad that it has a
Right.
lot of anxiety. On They don't want to take credit because they don't know how they're going to pay it back, right? And that's the
Right.
problem we're trying to solve. That's why we're putting that whole payment part upfront, saying you don't need to worry about paying us back. Just do what you do well. You sell cookies, sell more cookies, right? You sell fashion clothes. Just be the best version of yourself. Finance will take care of itself.
Right. And what was it like for you guys to build all of this tech? There must be a pretty incredible tech stack that you're building, yeah?
Yeah, so it's been, since incorporation, it's been 8 months now. First
Okay.
1 month, along with our CTO, Shankar, he comes with about 20 years, two decade of experience in building tech stack. We
Wow.
spent about a month just architecting the back end, because given the newness of this product, we had to build everything. We can't just take an existing third party product and
There's no
plug it
plug
into
and
it.
play going on
Yeah.
here.
So we spent that first 1 month only on architecture, saying that this has to be an architecture that is modular, scalable, and stable as we grow. Right? Why modular? Because if you think about this, the services that we are providing
Right.
from SeedFlex's perspective is providing an origination service which has a credit underwriting intelligence built into it. We are providing a customer management service, and we are providing a collection service or a repayment service. And each of this component has newness into it, right? So almost we had to build the whole tech stack on our own. Not almost, we had to build the whole tech stack on our own, starting from zero. Incredible journey, must say. So both me, Ritwik were fully involved in writing the product documents, weekly stand-ups, making sure it's running. Fortunate to have Shankar in our team, Avinash, who comes with uh, product experience from a background of lending and payments, and Joel, who is our go-to-market lead, as the initial part of the team. So with this five of us, the initial team had a lot of fun building this. But yeah, 8 months of course, goes without saying, a lot of hard work during that time.
I can't wait to get some of the other members of the team on. I'd love to have like a really
Yeah.
deep tech discussion with the team. It's just so interesting to see how this plays out. Um, and yeah, you're right. These partnerships are really important for generating this trust that's necessary, right, in both ways. And if they're already interacting, this is what I found over time, right? If your micro entrepreneurs and your merchants are already interacting with particular platforms, then almost by definition, they trust them. And if that platform then offers them something new, they're not going to think, again, it's like going to a restaurant you love. If they have a new dish, you're just going to think this is also going to be delicious. And it's the same thing for the platforms. Yeah, they'll just think if they're offering this new thing to me, it's going to be just as good as the rest of the platform on which I'm operating. So I trust it by definition. So building those partnerships has to be really important to you guys as well, right?
Our reach out to the end merchant is through the partners, and we take the partnership relationship very, very seriously,
Very serious.
and
Yeah.
we actually create relationship rather than partnership.
Yeah.
We go to up to that level, saying that ultimately this product is for your merchant. There are benefits you are going to gain. There are benefits we are going to gain. Ultimately, it's the benefit that merchant is going to gain is make the success or failure of the product.
Okay. Look, this has been another really great conversation with you guys. But before I let you go, kind of right at the beginning of this conversation, we talked about how committed Grab was to helping these micro and small merchants. And I feel like you've taken that with you, but maybe you can give a little bit of a vision for SeedFlex and how it fits into this mission to serve these micro and small merchants. And again, why it's so important to both of you and your team.
Look, I mean, credit is personal, and I'll start with a personal story. So I grew up in India, and part of my education was funded with a student loan. That at that point, I thought it was a privilege to get a student loan, and my father happened to be in a bank, so I was like, oh, wow, how lucky I am to get a student loan, that I could go to the school or college that I wanted to. And my first job was in US, as I said, with Capital One, and I realized it's a different world. A student loan is embedded into your education. You don't have to go to five banks and feel privileged or beg for it. It is structural, and how huge a difference that credit makes. So credit done the right way is power to people. We have experienced this in both ways, good and bad, in our personal life and professional careers. So nothing drives us more with Grab and beyond Grab than to make credit accessible in the right way and see these impacts, right? Merchants thriving, micro merchants becoming small, drivers buying their car out, buying a second car. This is like big, very big.
Yeah. It's kind of cool, like you said, to kind of move around the markets in which you operate and see the people that you're helping actually thriving. That's kind of cool. You like SeedFlex did that or had the impact to do that kind of thing. And that makes you feel great at some level, right? Savik, do you want to add anything before I let you guys go?
Yeah, to me, it's as personal as Ritwik mentioned. So my background, I graduated in statistics and mathematics. So my natural next step was to go for PhDs. Uh, and I started applying in US. I wasn't fortunate to get a student loan. So my dad has to take the money out of his retirement funds. And eventually I decided, even after getting through calls from a good university saying that I don't have the financial means to actually go through that journey. Uh, so, so that became personal. Having access to credit, whether I want it or not, should not be considered as privilege. it's almost like a right, that having access to credit should be a right uh, at some level. Uh, and especially for if you're deserving, if you haven't fallen into those edge cases or the cases that we discussed before. Yeah, so then I continued my journey solving the problem with bigger corps, then smaller startups, then Grab, and then hopefully we'll be able to serve micro entrepreneurs, micro merchants, B2C merchants better with SeedFlex. I think it's actually how we talk to ourselves every day is seed to grow and flex to repay. That's the product that we want to build, right?
I love it. Okay, let's end there. Ritwik Ghosh and Sauvik Datta, the co-founders of SeedFlex. I feel like this was even better than the first time we did it. You guys are awesome. Thank you so much again for doing this.
Thanks,
Thank,
Michael, for
thank
the
you, Michael.
opportunity.
Pleasure.